Friday, October 20th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's quarter to 12 in London. This is an early market update. Yesterday, early on, the Dow dropped about 150 points. And not surprisingly, as many of you commented, that the market would probably rebound anyway when the U.S. came in, and the managers came in, the market managers. And this morning we've seen the opposite. The market was up as much as 120 points, the Dow, earlier. Right now we're up 88 at 23,252. Gold and silver have come back down. We'd traded back, overnight we were above 1290. Silver was above 1730. So precious metals were doing well, and now we've come back off. Gold right now is at 1281, down about $9. Silver 1710, down about 15 cents. S&P is up 5.5 points, or 1/4%. The Dow, as I said, is up 1/3 percent. The euro is down 0.5%, down 50 pips, 111.80. The pound is virtually unchanged, 131.67. And the dollar is up quite a bit against the yen. It's 113.33, up 79 pips at 0.72%. So the dollar index is performing well today, mainly because of the strength of the dollar against the euro and the yen. It's up it's at 93.50, up about 1/3%. Zero hedge is giving the reason for this move, higher in stocks and higher in the dollar and lower in bullion. They're saying this is related to a Senate vote last night that paved the way to passing the 2018 budget and for a $1.5 trillion tax cut. And they say it sends yields higher as well. Yeah, the 10-year yield is at 236. I mean, a few days ago it was at 233. And we're nowhere near important levels, in terms of the bond market. We need to break above 265 a yield for the bonds to be under pressure. So not much there. But, they've put a chart in the story here about the CBO, Congressional Budget Office. They're still forecasting that the the debt, national debt to GDP is going to keep increasing in spite of this tax cut of 1.5 trillion. And they predict that the deficit will have been filled. The annual deficit will become balanced by 2028. So that's like ridiculous. Will tax cuts, improve anything in terms of the debt? I don't think so. Am I against tax cuts? No. What I'm against is against big government and increasing debt. And the reason we've had that is since 1971 is because there is no anchor to the monetary system. Politicians can keep inflating, spending, the bankers benefit, so they lend them the money, they manipulate the markets, and so on and so forth. And people will say, oh, but tax cuts are going to make the economy stronger. But, since the early 80s, we've had the Reagan tax cuts, we've had more, the Bush tax cuts, whatever you want to call, and things just keep getting worse. I think what we need is really a new monetary system. That's another story, though, at the moment. So I think in the short term, yeah, the market is taking that as positive. The Dow is up again. The dollar is strong. But if anything, longer term, this is just more and more, carte blanche for the same policies we've had since 1971. Especially since, the early 80s. more and more debt. You know, if you remember, I think the national debt was just about $1 trillion when Reagan took over in 1981. We had the Reagan tax cuts and everything, and we're now at over 20 trillion in debt, and that's not counting, according to Catherine Austin Fitz from Solari, there's I think she's talking about another 21 trillion that's unaccounted for money that the government has spent. And then you have the unfunded liabilities of Social Security. It's crazy. Will cutting taxes, by 1.5 trillion, will it really help the economy enough to be able to pay off all this debt, and even debt or money that hasn't been accounted for? No. So what I think, the market move today is just short-term noise. We'll have to wait longer term to see what happens. And yeah, frustrating as it is, physical gold and silver still, the only way to protect yourself against, this system where the government and the bankers scratch each other's back, and they create money out of thin air, and they manipulate, the cost of money. They manipulate the precious metals market, but they won't be able to keep doing that forever. If they were able to do that forever, gold would still be at $20.67 an ounce, and the Dow would be at, $1 billion. So, yeah, that's what's happening this morning. Later on this afternoon, I'll make another video, and I'm going to talk about what I think is the central bankers' goal, really, with the policy they have right now. Not only the Fed, but the ECB, the Bank of England, and the Bank of Japan. And I'd like to also start doing a few videos where I have a mining, gold mining sector, or silver mining sector sponsor. And what do I mean by that? Well, I'll be announcing later on today in the second video, I'm getting a sponsorship from a mining company in Canada. And the reason I'm doing that is because YouTube seems to be, kind of not, they're like censoring all my videos now. I do still earn from them, but they're giving me like a warning, and then I have to get them to revise it every video now. And this has been going on for the last 3 weeks. Before that, my videos were fine, and they're saying it's not suitable for some advertisers. So I'm trying to find other ways of funding the operation. And as ever, the sponsored videos will be informative, and they won't be, a solicitation for people to buy securities or anything. They're not going to be my advice. It's just to let people know what's going on in the markets, in the mining sector as well. And I will continue to do some of the cryptocurrency ICOs. So as I leave here, it's almost midday. Gold is holding right now this 1280 level. We're at 1281. Silver is 1710. The Dow is up 90 points, 23,254. S&P 2568, up 6. Yeah, and the dollar is still, fairly strong this morning, up over 1/3%. And as I said, I think this short shot in the arm is just temporary, for the dollar and the stock market and the economy as a whole. It's the debt. That's the problem, and the monetary system. So if you enjoyed this video, please like, share, and subscribe to my channel if you haven't yet. You can also follow me on steemit.com.